Hi, and welcome back. I know it's been quite a while, I think over a month, but I think I'm ready to share how the portfolio is doing and show the progression that I've had. So, the biggest thing in the last month, we'll go ahead and look at the 1 month chart right now, is that we can see I have lost a tremendous amount of money. The most money that I've lost out of this has absolutely been Bitcoin. As you can see here on the 23rd and 24th of September, it crashed about 20%, I believe, and I lost about $100 right there. That being said, still down about 180 on the month. Stock market's been pretty volatile, but I'm confident that I'm going to continue to do well in the future, perhaps even do better, hopefully do better. But I'm pretty excited for what I've got going on. So as you can see by the thumbnail on this video, my portfolio value is about 2476 right now. I have 2600 invested, so not good at all, but we're slowly getting there and working our way back up. Clearly today helped, up about $27. So we'll go ahead and take a look at what I've got going. So VTI right here, this is my S&P 500 index. It hasn't moved a ton. So in the last month, it's down, not a tremendous amount. The stock market's been down. Clearly the S&P 500 has been down. So 3 months still not looking great. 5-year spectrum not looking great at all. I have received a dividend payment on that, and in a little bit later in this video, I'll talk about my dividend payments and why I'm excited about my portfolio, what I've changed in the portfolio. So again, we have Vivint Solar, which clearly is a stock that I've continued to buy and buy and buy. My average cost is up to $6.89. The problem here is that I'm actually up $1 right now. I was down coming into today. On the week, it's not looking bad at all, but when we start looking at the month right there, down 16%. So, if I remember correctly, it had a high around $9 somewhere in here, 9.46. Not good at all. Lost a ton of money on this one. I was up about $80 at one point. As you can see, since December of last year, so last 8-9 months, it skyrocketed in price, almost tripled, but now we're starting to see a downward regression. That being said, I think that what they've got going for the future is going to do well. I'm confident in that. In a couple of my videos in the past, I've talked about why their leasing strategy can work and why it should work, how they're getting rid of debt, and why I'm still confident in it. So I'm not currently buying any shares, but I do have 40 shares. So equity of 276.80, about 11% of my portfolio. So we're going to let that sit for the time being, but I'm still confident in the future that they can make money, that the price of that stock is going to go up. And because they're on that lease kind of style of business, I think that could be a dividend stock in the future for sure. So Coca-Cola, if I remember correctly, I did have a share or two of Coca-Cola in that last video that I made about a month ago. I've continued to purchase a couple shares, so I've got 5 going on here. This is a dividend king. I've talked about it in the past. This is a company that continues to raise their dividend every single year and will do so for the foreseeable future. So even though I'm down 85 cents on that all time, not a big deal at all because I'm getting paid my dividends. So 3 months, it's up a little bit. 5 years, it's up 30%, which isn't great at all. But when you factor in those dividends, I think it's a good company to stay invested in. SPHD. So this is my S&P 500. Another one that I have. It's a little bit cheaper. It's an index fund at 41.63 right now. So total return down about $2 on that one. This one is interesting to me because it actually pays a monthly dividend, and when we extrapolate that out to a full year, it's paying at about 6.5% right now. I think it's about 15.2 cents per share monthly on that dividend. So that's an interesting one. I'm happy with the performance on that, even though it's down a little bit. As you can see, it's flattened out in the last 5 years, but when you're talking about a dividend of roughly 6.5%, that's not a worry at all. I can make 6.5% on dividends and make 1% on that stock price a year. I think that's a good investment to make, and it's pretty affordable at under $42 a share. Agilent has performed pretty well. So as you can see, I'm up $8 on that, almost 6%. Average cost of $71.66. I don't know, not a whole lot going on here. I did receive my dividend from them back in, I want to say July, and I'm due to get paid later this year again. So that's the good news, is that I've tried to increase the number of stocks in my portfolio that have dividends, that are paying active dividends. And I think that's important just to have kind of that reassurance or almost a safety net, even if the stock market does continue this kind of downward regression that we've seen in the last couple months. But in the past 5 years, as you can see, up 90%. Well, not much else I can say about that. That's awesome. Microsoft, we won't go into that one in too much detail, but Microsoft, I'm up about $12 on that one. Logitech is another one that I've talked about. Haven't changed my position on either of those, but they have performed well for me shortly. Sony, I have done decent on that. I think I'm about even from when I purchased those shares. Pfizer has really taken a hit and has not recovered from that. So as you can see, down 14% on Pfizer, not good at all. It only accounts for 4% of my portfolio. That being said, still not good, still not what I want to see out of my portfolio. So we can see in the last month, it's only down 0.5%. We're saying, well, that's not bad at all. But when we look at the 3 months, down almost 19%. On the year, down almost 20%. And 5 years here, they are up, but you can see that we had this upward trend, and now we've kind of regressed and dipped down. That being said, I've done some research, 57% hold rating, but a lot of people think it's a great chance to buy Pfizer right now because it is so low and they are paying an active dividend. So I'm looking at maybe buying that in the future coming up. So now we have Nintendo. That hasn't done a whole lot for me, and this is my newest holding. I bought one share each of the last 2 weeks, and AT&T is actually due to pay a dividend, I believe, on the 1st of November. So up 11 cents, that's nothing, but they are paying a dividend of, if I'm correct, I want to say 51 or 52 cents a share quarterly, which is pretty darn good. This is a stock that a lot of people, if you look across YouTube or any sort of investing website or outlet, they'll say this is a great stock to have in your portfolio because those dividends are so high. And as you can see, up about 10% on the year. And if we look, we see that AT&T's been fairly stagnant in the last 5 years, but not a huge deal. They're on an upward swing right now. This price might be a little bit high, but again, high dividend. I'm not super concerned about that. Charles Schwab has not performed well at all, but again, a little bit of a dividend there. I'm attributing some of this from what I'm reading to the stock market just not doing well in general, and a financial service company like Charles Schwab kind of reflecting that. So not a big deal at all. Four Corners Property Trust, I've covered quite a bit. That's a real estate investment trust, and I'm up a little bit on that, but I'm really kind of relying on the dividends. That's paying about 6% right now. This is another interesting one, Verit. I did look that up. Pronunciation's a little bit odd, but a 60% buy rating. This is another real estate investment trust. Restaurants, industrial spaces. I've got an article pulled up that I'll talk about in a little bit. They do a really good job of diversifying everything that they're holding, and that article goes into a little bit of depth about why this is a pretty stable stock. So this used to be a larger holding, basically a larger company, and they had an accounting error, and it was a real mess. So they relisted here in 2015, and it did fairly well. As of 2016, it was up to, what is that, $11, something like that, and took a little bit of a nosedive. But since April of 2018, it's been nothing but up, and this is another one that's paying about a 6% dividend. Super cheap. It's only trading for 10.05 right now. My average cost $9.78. So I think I'm going to continue to buy this every week because I'm only putting 100, or the next couple months I'll be putting $50 a week in. I think this is a good stock that I can kind of use to balance things out, even things out, and basically create a more diverse portfolio. So as we can see here, this is the interesting thing. The earnings are pretty stagnant. They're not moving up and down a whole lot, but that earnings is pretty good. 60% buy rating from the experts at Robinhood, so I think that's a big deal. Price to earnings ratio 42.05. That's pretty darn high, but I don't think it's a huge deal. I'm excited about this one. I tend to say excited a lot, but this one I really am excited about, and I think that this has a lot of upside potential. So here in this article, they talk a little bit about why this is going to have so much potential. So I talked about kind of the diversity of their holdings. So here you go, their rent breakdown. They have 42% retail, 21% restaurant, 19% office, and the remainder in industrial properties. Now they have a target breakdown of where they want to be and how they want to move that stuff around. And this is an interesting piece. They said that historically, something as diverse as this would be seen as negative, but now we're kind of looking at it as a positive because it's allowing them to, as they say, put money to work in a variety of property types on an opportunistic basis. So basically, if something doesn't work, if their money's stretched out a little bit, they have it kind of diversified, and that should help them. Most interestingly, earlier in the article, they talk about the reason that Very is paying such a high dividend. Now, the big reason is that the previous holding basically was paying a dividend, and due to that accounting error, they had to settle, pay a bunch of fines, and they feel that basically to regain trust in this holding, they need to pay a high dividend. So they have three very similar real estate investment trusts to Very and their dividends. So as we can see, 3.7, 3.7, 5.2, not bad at all, but here we're paying at 6.63%. The only downside I see in this stock is that they have kept the same dividend in the past, I want to say not quite that far, 2 or 3 years. They haven't increased their dividend, which isn't a huge deal. It has moved upwards, so clearly their dividend yield is going to be lower, not a huge deal. But in the future, if that price does tend to move higher, then we're looking at a dividend yield that's quite a bit lower. Not a huge deal breaker for me, but I think it is something to watch out. Last of all, we have the dreaded Bitcoin that I spoke about earlier. Now, trading for 81.28, up on the day, but when you're down $107 or 21.5%, it's not very good. I had thought about selling. I talked about maybe selling, but the more research I've done, I'm more confident that the next Bitcoin halving taking place in May will see another uptick in the price as the past two halvings have. It's a little pun for you. But basically, in the first two instances of the Bitcoin halving, we've seen that 12 to 18 months after that event, Bitcoin is peaking 10 to 20 times higher than its previous high. So I'm down $107, but the idea is that this is only $400. The more money I invest into my Robinhood account, the better this will perform, and I think that I can make this work. So the best example here, on 3 months, we're down 27%. We look at the past year. We were seeing this downward trend. It was moving around a whole lot, but here, September 23rd, 24th, really dropped off there. So it happens, not great, not horrible. But man, what if we had been invested in Bitcoin 5 years ago? That would have been a great payoff. Up 2,000%. That means a roughly 20 times return on your money. So if I'd put $100 into Bitcoin 5 years ago, we're talking about 200 times. So if I'd put $100 in, we're talking about a $20,000 return basically on that investment, which would be great, but can't always win. So I'll go ahead and show once again on the week. Not great, but we are seeing that upward trend in the last couple of days. The stock market's done a little bit better. And as you may have noticed, everything's up today, even Bitcoin. So that's a good sign. On the month, clearly not great. And 3 months, again, not great. All-time, this is where it's really frustrating, is that I had that all-time high on July the 8th, or July the 9th, but I had that high, and we're kind of seeing a regression since then. And that's kind of why I've switched, I think, from trying to be aggressive to understanding that dividends are slow. They take time, and they're not going to amount to much in the beginning, but I think that's the smarter way to go, and the more research I do, everybody seems to think that. So if you stick around, we're going to talk about my dividends. All right, well, thanks for sticking around. As I talked about earlier, I'm going to be looking at my dividends and why I have decided to go to a more dividend-heavy approach. So going all the way back, this is my dividend history, clearly with my name blanked out. But we've got Ford was my first dividend on March 1st. I ended up selling them. That was when I was really early, didn't have much money at all, and I was a little freaked out. So then July 11th was my next dividend, so that was a big gap there. I ended up selling this stock, Medical Properties Trust. They weren't performing well, but I did receive a 25-cent dividend. And then from here on out, I think I've actually kept every single one of these stocks since July. So July 15th, 29-cent dividend from Four Corners Property Trust. Agilent, 33 cents in July. August, I only had one, 34 cents. And then September, here's where it's really going to start to take off. So we've got a dividend from Pfizer on September 3rd for 72 cents. Microsoft on the 12th. Vanguard Total Stock Market, that's one of my index funds. So that's $1.40 on the 19th. And then the 20th, got a payment of $1.45 again. The 30th, this is one that I want to stop and take a little bit closer look at. So this is that SPHD that I showed earlier. So 4 shares, 61 cents. So again, 15.2 cents per share. This pays monthly, which I think is going to turn out to be huge because even though that's only 61 cents, I'm now up to 6 or 7 shares. I'd have to go double check on that. But basically I'm looking at least $1 or $2 every month now as I continue to buy that every week. Now Coca-Cola. I've bought, I think, 2 more shares since this ended up paying or since this went through. We're looking at 4 shares at 40 cents a share. And again, the reason that I really like Coca-Cola is that if you keep Coke for a long period of time, you know that that dividend is going to increase. So we're at 40 cents right now. Based on everything that I've read, they've increased their dividends for the last 50 plus years. So we know that at the very worst, next year they're paying 41 cents on that dividend, which is, if you do the simple math there, a 2.5% increase on the dividend every year. It's just a no-brainer at this point. If I can buy this stock, it doesn't even really need to be a low price at all. Just get in and ride those dividends at 40 cents a share, or excuse me, 40 cents a quarter. That's huge. So I'm really looking forward to that one in the future. So now these are coming up in the future. So I've got another one from Four Corners Property Trust. It should be the same amount. There you go. 28 3/4, so 29 cents. Buried. That's the one that I'm looking at. And even though I bought more shares, that closed back in September actually, their execution date. So almost 14 cents a share, total of 41 cents on those 3 shares. But in the future, I've got 7, and clearly if I plan on buying every week, I'll have more than that. But looking at 41 cents on that. Agilent, let's see, 16, almost 17 a share, so 33 cents on that one again. And then looking forward, like I said, November 1st, I think AT&T pays, and I've got 2 shares of that that'll go through before the execution date, which means I'm looking at another $1 there. So I have an Excel spreadsheet with this, and I may go over that in another video, talk about it in more detail. But I'm tracking those dividends and basically trying to increase my dividends every month, if I can, but every year for sure, because it's a safeguard. That's just the simplest way to put it. It's a safeguard. So thank you for tuning into this video. Next week, I think we may look at how my portfolio's grown directly and try to take some screenshots from my older videos or maybe my first video. Talk about some of that stuff. So let me know what you'd like to see. Thank you, and I'll be back next week. Make sure to like the video.